should one buy a house or rent one? So whenever this decision is being made, a lot of emotions are involved. So that's for every individual. So let's just evaluate this decision, right? There are both financial aspects involved and even the emotional aspects. Now let's look at a house which is worth around 2 crores in Hyderabad. So typically, if somebody is buying that house, they will be foregoing a rent of 30,000. Again, by rent of 30,000, I mean the rent may be slightly higher, but if you are paying the property taxes and if there is a renovation cost which is there whenever the tenant changes, right? And sometimes the house may be vacant. That's the reason why I have assumed it to be around 30,000. So that means if you are buying a house, the rental yield will be around 1.8%, right? So that way, and the interest rate at that point of time, if you are buying a house, the interest rate would be around 9%. So the effective interest rate is around 7.2%. So since you are paying this money over 10, 20, or 30 years to a bank, so inflation will be acting in your favor. So any developing country, there will be a decent amount of inflation. It may range from anywhere between 4 to 6%. That has been the case in India. But again, at an individual level, the inflation will vary. So let's say if we are assuming a 5% kind of inflation, so your effective rate would be coming down to around 2%. So if you don't own a house, this can probably be a good decision. But there are other factors you have to look into. Let's assume that you are somebody who is earning around 4 lakhs, right? So tax according to the new regime would be around 7.8 lakhs. Your net income will be 40.2 lakhs. And if your tenure is for 30 years, so approximately you'll be paying 19 lakhs as the EMI, 19 lakhs 31,000. So your income after EMI would be around 20 lakhs 88,000. That would be 43% of your gross salary. So this has to be at least 33%. So if it is falling below that, the banks usually give you a lesser amount of loan. So typically, this would be an income of somebody who is in the age of 30 to 35 with a kid. So if you are somebody with a kid, then your school fees would be around 2.5, 3 lakhs, the groceries, and if you are traveling, right? After that, the money you will be left with after all this stuff is around 5.8, 5.9 lakhs. So let's say your salary is increasing by 10% in the next 1 year, right? The tax increases by a huge amount because right then anything above 50 lakhs you will end up paying surcharge, and your net income is increasing only by 6%. That's something you have to understand. So why this is important, I will explain to you later. So the same amount of EMI, your income after EMI increases. So the school fees is increasing by anywhere between 10 to 15%. The groceries probably will be around 5, 6% at the inflation level. If you are somebody who is traveling, you know that the travel inflation is also at 10%. So the money you will be left to invest is 7.18 lakhs. So I was telling you, right, the other factors which you have to consider before buying a houses, that is the money left to invest. Because in order to maintain the same quality of life, probably the amount you have to contribute for the retirement or for your kids' education, maybe, you may end up compromising on that. So that's the reason why before taking a decision on how much you have to invest for a house, how much you want to invest in a house, you have to look at these numbers, right? Say, for example, you require around 10 lakhs for this, then your EMI should drop by 5 lakhs. Probably you should be okay with buying a 1.5 crores house, not going with a 2 crores house, right? So if this is sufficient, then probably you should go for a 2 crore house, no doubt, right? Again, so there is a issue with the tenure as well, right? So what if you are taking going for 10 years tenure, 20, 15 years tenure? So many people think that, by paying over a long duration of time that you end up paying more as an interest. But again, you have to understand it's just an interest rate and there is an inflation which is acting, and the time value of the money is something which will be, as we go into the future, when there is inflation, the value of the money will go down, right? What you're paying 1 crore after 30 years is probably like around 20 lakhs today. So that way you have to look at it. So if you are somebody, because of that, if you are thinking only in the absolute terms and if you end up paying early, what happens is the money left to invest will become lower and lower. So, at a 15-year tenure level, this will be like less than 5%. If somebody is investing less than 5%, so it's very difficult to achieve their goals like retirement and at the same time other education goals and other important goals. See, the healthy saving rate would be anywhere between 25 to 30%. So even here, this is a challenge, right? And there is another thing. If both wife and husband are earning, and each of them is earning around 4 lakhs a month, so probably this should work because there is another amount. Approximately this amount will be there. Close to around 35 lakhs will be there for the investment. So both put together. So invest if you are investing it right, then it's okay. And probably when both of them together are having an 8 lakhs income, they usually go for a loan which is over 3 crores as well. So, but again, even that is fine. So what we are observing in the market is that with this 4 lakhs, people are trying to buy this, and with this 4 lakhs as well, they are trying to sell, buy another one. So the one for living, then the other for the investing. So is it a right decision to invest? So one, if you are living with your family, there are many emotional needs. There is no way I can attach a value for that. That's fine, right? It's okay even if you are foregoing. You want to be happy with your family. That matters a lot, and you cannot attach any cost to it. But what if you are investing, right? Then you have to do it a rational analysis. So for somebody who can afford a 2 crores house, typically he is having a salary of around 48 lakhs, right? So the post tax, the income increases 6%. So the assumption many people make is that the housing prices will go, over 12%, over 15% and 20%. Nobody knows why, right? Nobody can answer that. All they come up with is that housing demand never goes, land is in scarcity. So, but your salary is increasing only by 6%. So eventually it is a demand and supply. If anything is over 6%, you will not be able to afford. Bank will not be willing to give you a loan, right? That's the thing. So, and the other thing, the scarcity of land is something which you have to, I don't think you should be factoring it much. The reason is now it's a time of the high rises. So we are having a population of 160 crore, assuming that there are four people in each family, that is 40 crore families. So all you need is 40 crore houses. So a high rise with a 40 floor, 1 crore high rises with 40 floors is what is required now, right? So you don't know how this pans out, but just investing for the sake of it, investing in the house may be a wrong idea. Don't expect the return to be more than 6-7%. That's how it is going to be. Maybe there is some involvement of cash. As a result, you are bumping it up. So from the time of demonetization, if you look at it, cash as a percentage of GDP has gone down, right? So for somebody who is already owning a house, and you should always remember that somebody off your salary will be able to afford your house. And if your salary is increasing by 10%, your net increase will be around 6%. That is after tax. So that's the price rise you can expect. And 10% at the 48 lakhs level is like really very rare. Those are outliers. Usually the price, if you check the salaries, if you are somebody who is in that range, you already know that 10% is not something you can consistently expect, right? So that way, housing, in order to live with your family, in order to create some great memories for you and for your kids and for your parents, it's a right decision. I don't think too much about it. Uh, but again, you have to check your goals. Where is this priority? Whether this is the highest priority, then by all means you have to go ahead and buy it. And again, please bargain before going ahead. Don't expect the prices to run like 15%, 20%. The long-term average will be anywhere between this one, around 8% probably, right? So it depends on your income level. At a 50 lakh income level, if the growth is at 6-7%, the price, the house you will be living in, if somebody has to buy, that would be the growth rate of that house, right? So, and the second question is, should you close the loan early or late? This is a 30-year interest calculation. If you look at it, XARR calculation will be coming at 9.38%. The reason why 9 comes to 9.38% is if you look at any bank interest rate, it is a monthly compounding which happens. As a result, your net interest would be 9.38% per annum. So the same way, if you are calculating for 20 years, that's still the same 9.38%. For 15 years, it's still the 9.38%. Say, for example, if somebody is planning to play, whenever they are receiving bonus, they are putting in 2 lakhs. That's on first of every year. All you will do is you will end up paying, you'll closing the loan 8 years or 9 years early, but still the interest rate remains same. See, it is more behavioral, right? If something is coming as a recurring expense, you think as a burden, but even if you are closing it before, the interest rate you will end up spending would be same. Only thing is, like if you are done with all your goals, probably by all means you should close this. But if you are somebody who is in the stage of accumulation where the goals are, well, let's say your retirement goals or educational goals for your kids are not yet done, so probably it's not right idea to close it soon. And another reason is inflation will be helping you. For any loan taker, the higher inflation will act as a boon for you, right? Again, in a deflationary condition, it makes sense. You should always close. But at least in India, for some time, at least for the next 10, 15 years or 5, 10 years, for foreseeable future, inflation will not go down. So that's the case for all the developing markets, right? That had been the case. That had been the journey of the inflation for all the developed countries as well. If you look at America, even now they are having a 1-2% kind of inflation. So closing early may not be a right thing to do if you're not having if your goals are not yet fulfilled, other goals. So, but if all the goals are done, then probably you should close it. 9.38% is a very high interest rate. On the market side, if you look at the average returns are around 11%. So you'll not be making a huge amount of difference even if you are investing, right? This video is for educational purpose only. It is neither a recommendation to buy nor sell the asset class in discussion. Thank you.